Yes, even though they don't work 100% of the time, candlestick patterns are valid technical analysis strategies that should be implemented in your day-to-day market analysis if you do consider going into a career in trading. Hello everybody, William Jordan here. So we're continuing in our roll into the different candlestick patterns and formations, starting off right now with the hammer. Now I can almost hear the people out there shouting, "Foul! This is not a hammer, this is a hanging man like you showed in your previous video, William Jordan." It is true that these two patterns look the same, but there is, however, a major difference between the hanging man and hammer patterns, or else I would not be making this video. Remember that we said that the hanging man was a bearish reversal pattern, meaning it happened in an uptrend and signaled a possible turnaround. The hammer, on the other hand, happens at the bottom of a downtrend and signals a turnaround, meaning it is a bullish reversal pattern. Now the body of the candle can be either red or green, and like in the previous patterns we saw, it is a single candle pattern. The body is small with a wick that is at least twice the size of the candle's body. A small wick at the top of the candle can be allowed, but ideally there should be no wick at the top of the candle. Now, in order for a hammer to be a valid bullish reversal pattern, like we said earlier, it needs to be situated within a downtrend. If it is situated within a sideways ranging market, it is not a valid reversal pattern. If this candle is situated within an uptrend, it is a hanging man and it is not a valid bullish reversal pattern. So once again, we need to see a downtrend first of all, followed by the hammer bullish reversal pattern. Confirmation comes as soon as the reversal takes place after the hammer reversal pattern and prices start going up again. More aggressive traders will get into their trades as soon as prices trade above the hammer reversal pattern, where more conservative traders would wait for prices to close above the hammer reversal pattern, and the most conservative traders will probably wait for a whole candle to trade above the hammer reversal pattern. Just remember once again that the more you wait before getting into a trade, the more price action would have passed you by. Now let's look at these four candles, which are valid hammer reversal patterns. Since all four candles have small bodies with wicks that are at least twice the length of the bodies of the candles themselves, if they are situated within a downtrend, all four of these candles can be considered valid hammer reversal patterns. Remember to wait for the confirmation by prices trading above the hammer reversal pattern. Now let's look at the sentiment behind the candle. Who is in control, the bulls or the bears? Now since it is situated within a downtrend, prices opened up right over here. The bearish sentiment was still ongoing since the prices dropped to the lows of the wick right over here. At this instance, this is a large red candle. Now all of a sudden, bullish sentiment came back into the market, driving prices up ever higher past the opening price to the close right over here. So as you can see, bullish sentiment overall created this hammer reversal pattern, and this same bullish sentiment continuing further will give us our confirmation when the full reversal is in effect. In the red candle, prices opened up right over here, and the bears were continuing driving prices down to the tip of the wick. At this moment, once again, this is a large red candle, but more bullish sentiment came into the market as sellers were closing off their positions, more buyers entered into trades, and prices started climbing once again. Even though, at the time of the price closing right over here, the bears still had a slight victory, clearly there was a lot of drive from buyers in the market. We still have to wait for the confirmation of the market turnaround though. So the green candle is slightly more bullish than the red candle overall. So how would you trade this bullish reversal pattern that is the hammer? Let's take a look at Twitter on a 10-minute chart. As we can see here, from the early morning hours, there was very strong bearish sentiment on the stock, driving prices lower to the late morning hours where we have an area of noise. I can almost say we have a false hammer reversal pattern here since it didn't quite pan out, but for sure we did have some bullish sentiment come into the market from the look of these green candles, but the bullish sentiment wasn't quite enough to drive the prices up ever higher before bearish sentiment came back in, giving us a second strong downtrend. Then we came to the lows of the day. Now remember, this candle at the moment is a large red candle. Then all of a sudden, bullish sentiment came back into the market, pushing prices up and giving us this hammer reversal pattern. Now, if you were in a short position, this could be a good point for you to exit your position, cash out your winnings for the day, or if you want to, you could even move your stop loss in a bit closer if you were not too sure about the reversal taking full effect. But if you were in no position, this could be a good place for you to start thinking about going into a long position. More aggressive traders will trade as soon as prices trade above the bullish reversal pattern, the hammer, and more conservative traders will wait for prices to close above the bullish reversal pattern, where even more conservative traders will wait for one whole candle to trade above the hammer reversal pattern. But once again, like I said, remember, the longer you wait, the more price action would have passed you by. But this could still be a very good trade for you throughout the day if you wanted to go long from this bullish reversal pattern. Now let's have a look at Zillow on a 5-minute chart. Even though we do have some bullish candles throughout the day, there is strong bearish sentiment giving us a nice downtrend even with these areas of uncertainty within the market. Then we get to the bottom just after 12:45, where we have our bullish reversal pattern, the hammer. If you were in a short position, this could be a good place for you to exit your trade, cash in your winnings, or if you want to go long, this could be a good place for you to start entering into a long position. For the aggressive traders out there, as soon as prices trade above the hammer pattern, more conservative traders will wait for prices to close above the hammer reversal pattern, and the more conservative traders will even wait for one whole candle to trade above the bullish reversal pattern. Whatever your strategy, as we look throughout the rest of the day, and even though there is some bearish sentiment coming in, this could still have panned out and made a nice, good, positive trade for you if you entered into a long position from the bullish reversal pattern, the hammer. So now you know how to spot a hammer bullish reversal pattern, and more importantly, how to trade using the hammer bullish reversal pattern. As you may have noticed, this is basically the exact opposite of a shooting star reversal pattern that we saw in the previous videos. Okay, but if you have any questions for me, leave me a comment down below. I'll be glad to answer it. Now let's have a look at the inverted hammer. If you have followed my video so far, you probably already know how I'm going to explain the inverted hammer, but for those of you who don't, let's get into the details. The inverted hammer is also a bullish reversal pattern. It is basically the exact opposite of a hanging man. The inverted hammer is a single candle formation composed of a small body, either red or green, with a wick that is at least twice the length of the body of a candle. A small wick can be allowed at the bottom of the candle, but in perfect market conditions there should be no wick protruding from the bottom. Since the inverted hammer is a bullish reversal pattern, it should be situated within a downtrend. If this candle is situated within an uptrend, it is not an inverted hammer, but rather a shooting star, and if it is in ranging markets and this candle shows up, it should not be considered a reversal pattern. So we are in a downtrend, and then the inverted hammer candlestick pattern comes up. Confirmation occurs as soon as prices turn around and start trading upwards once again after the candlestick pattern. Aggressive traders would enter into their trades as soon as prices trade above the inverted hammer reversal pattern, where conservative traders would wait for prices to close above the pattern or wait for a whole candle to have traded above the inverted hammer bullish reversal pattern. So which of these candles is a valid inverted hammer reversal pattern? All 4 candles have small bodies, and all 4 candles have wicks that are at least twice as long as the candle bodies. So if they are situated within a downtrend, all 4 of these candles can be considered valid inverted hammer reversal patterns. Remember that we have to wait for the confirmation, however, in order to strengthen our expectations of a turnaround. How about the sentiment? In the first candle, prices open up right over here, but all of a sudden the bearish sentiment from the downtrend gets tested by the bulls, driving up the prices to the tip of the wick. Now this candle is a large green candle in a downtrend. Bearish sentiment, however, takes back, driving prices lower past the opening price to the close right over here. With the green candle, prices open up right over here, and even though it is within a downtrend, buyers in the market take control, driving the prices up to the tip of the wick, forming a large green candle within a downtrend. The bears take back control, however, driving the prices lower once again to the close of the candle right over here. So how is this considered a bullish reversal pattern if the bears did have the last say in these candles and it is situated within a downtrend? Remember that before the inverted hammer showed up, it was a large green candle, indicating strong bullish sentiment even within a downtrend, and hence it could have shaken the confidence of the bears at that moment. So which is more bullish, the hammer or the inverted hammer? In the hammer, prices opened up right here and the bears drove the prices downwards before bullish sentiment came into the market, driving the prices up to the close. The bulls had the final say. In the inverted hammer, prices opened up right here, bullish sentiment drove the prices upwards before bearish sentiment made them go down once again to the close. So the bears had the final say in the price movement. So from this we can see that even though the hammer has a red body, since the bulls had the final say in the price movement, the hammer is more bullish than the inverted hammer and is a much stronger indicator of a price turnaround than the inverted hammer. In both cases, however, we always need to wait for the confirmation of a turnaround in case our theories turn out to be wrong. Let's take a look at XPO Logistics on a 15-minute chart. As we can see, no real price movement happened earlier in the day. There was a ranging market, but in the last couple of hours of trading, strong bearish sentiment was in the market, giving us a nice strong downtrend on the stock to the close of the day right over here. These last two candles we see, the last 30 minutes of trading, give us two inverted hammer reversal patterns. Now, if you were in a short position, this could be a good place to exit your trades and take your winnings. And if you are a day trader, of course, this is a really good place to exit your positions and not hold a trade overnight. However, if you were in no position at all, this could be a good place for you to start preparing for the next day. Think about how your trades are going to go. Look at the stock, look at the fundamentals behind it, and see if you could enter into a long position the next day. If you were going into a long position, more aggressive traders will enter as soon as prices trade above the inverted hammer reversal pattern from the previous day. More conservative traders would have waited for the close of the first candle, or even more conservative traders will have waited for one whole candle to trade above the inverted hammer reversal pattern. Whatever your strategy and however conservative you are, this could have really turned out to be a good long position for you trading the inverted hammer reversal pattern. Now let's look at Home Depot on a 5-minute chart. Remember, 5-minute charts are really short term, but like I said in some of my previous videos, as traders you should be really fast thinking, really fast on your feet, really fast to spot the different trends and different formations show up to get into trades. So 5-minute chart, here we can see an inverted hammer on a downtrend that lasted only 20 minutes. And right next to the inverted hammer, we have a hammer reversal pattern. So this gives us double the confidence of a possible market turnaround. Okay, if you were in a short position, good point to exit your position or moving your stop closer. I would have exited my position here, but if you were in no position at all, you could have traded as soon as prices, if you were aggressive, as soon as prices traded above the hammer reversal pattern. More conservative traders would have waited for prices maybe to trade above the inverted hammer reversal pattern, and the most conservative traders would have waited maybe for one whole candle to trade above either one of these two reversal patterns. We can see in the same chart in the next day, which is basically today, there is another downtrend with an inverted hammer right over here. Once again, if you were in no position, aggressive traders would have entered the trade as soon as prices traded above the inverted hammer reversal pattern. More conservative traders would have waited a bit longer for prices to close above the inverted hammer reversal pattern or one whole candle to trade above the reversal pattern. However conservative you are, this would have turned out a really nice trade for you, giving you some decent gains by the end of the day. So like I said in my last video, this could be a good point for you guys to go look at the different trading platforms you use, go look at different stock charts over different time frames, and see if you can spot the two reversal patterns we talked about today, the hammer and the inverted hammer. Look for places where you could have traded those reversal patterns and how your trades would have turned out, and also look for places where the trades wouldn't have turned out and why they wouldn't have turned out very well for you guys. Remember, technical analysis and candlestick pattern trading isn't 100% sure, so remember to place your stop losses. That would give you insurance not to lose too much money if your trades don't turn out, and as long as you have more profitable trades than unprofitable ones, you would be fine in the long run. Just remember to place your stop losses, and this would give you a good head start on your way to becoming a consistently profitable trader. So I hope you liked today's video. If you did like my video, remember to leave me a thumbs up down below. I would appreciate it, and of course it would help out with my channel. If you have any questions for me, leave them in the comment section down below. I would be glad to answer them for you guys. If I can, of course. If I cannot answer them, I will do some research and answer them at a later point in time. But please, I would like to interact with you guys more. This was William Jordan from the Moneymaker channel. Hope to see you all in the next video.